All right, welcome back to another episode of the Black Bullion Show. How should we expect silver to perform post issue? Well, that's up in the air, but we can use past data from the gold to silver ratio, which I will be calling GSR for short, moving forward in this video. We can use the GSR to help us out. Well, if you're new to this channel, I would just like to ask you to please click that red button to subscribe. Also, please like the video to help get this economic evangelism out there to the masses. It helps the YouTube algorithm to do so. And also, if you would just like to get a quick synopsis of the video, check it out in the description below without having to watch the full thing. Now, about a year ago, Jeff Clark, who works with Mike Maloney, wrote this article entitled, "Is the gold to silver ratio headed to 100? 3 questions to answer." Now, within this article, there is a chart that I will be using and will be helpful for me a little bit later in the latter part of this video. So, what's the purpose of this video? We are going to try to see if we can if the gold to silver ratio performance, can we expect a kind of performance from the GSR during the issue? Well, is there a common performance level that we can expect from silver based on the gold to silver ratio in the past? And my answer to that is yes. But quick disclaimer, this is not an exact science. This is purely speculative. Now, there are a lot of things you can do to try to figure out and nail down what silver and what gold will do. All of it is speculative, but this in particular, I know is not going to be the most detailed, masterful way to try to figure out the exact price based off of the gold to silver ratio. This is just a quick and dirty way to kind of eyeball things. So just take that, before moving forward. So during a crisis, the gold to silver ratio hits a peak, then begins retracements back down from the peak. On average, since the early 70s, silver has performed 2.49-fold from the gold to silver ratio peak of its respective period. So during the 70s, on average, comparing the other performances in other later years, it performed 2.49-fold from peak. Same thing with other performances. It also does this over a period of years. On average, 5.66 years from the GSR peak of its respective period. So on average, it takes about 5.66 years from the peak of the gold to silver ratio before it hits the bottom of the gold to silver ratio. Now, I found that actually to be pretty interesting, pretty impressive. But also take note that I based this off of 3 particular periods. I left out some other periods. The one major period was probably the .com bubble, but you'll see why coming up. But for all of the major gold to silver ratio performances, there are 3 main ones since the early 70s. And on average, they lasted about 5.66 years, and silver performed 2.49 times during those periods. Okay, so here's the data that I based it off of. So we're going from the nearest downturn to the furthest back. So for the Great Recession, the gold to silver ratio peak was 79.89 in 2009. And then the GSR trough was at 31.60 in 2011. So it took about 4 years to decline, and roughly on average, the performance was 2.5x fold. The .com bubble, the GSR actually increased. And this was actually during the gold bull market that began in 1999. So this actually kind of makes sense. In the early 90s, there was a recession. The GSR peak was at 99.49 or 47, and that happened in 1991. The trough was at 45.76 in 1997. That was a 6-year decline from the peak in 1991. And silver performed 2.17 times during that performance. In the 70s, the GSR peak was at 43 in 1973, and the trough was at 15.13 in 1980. That was a 7-year decline. It took 7 years for it to hit this trough, and there was a 2.8 times or X-fold performance in the 70s. Okay, so this is the data that I used to base my averages from as far as average performance and average time length it takes for it to go from the peak to the trough. So what about the issue that we're currently living in right now? Well, our current GSR peak is 114.77. Now, that's not to say that it can't hit an inflection point and go back up to hit higher highs. But right now, we are coming off of the peak that we hit in April of 114.77. So based GSR trough, based on the Great Recession fold performance, would be at 45.908. That's the trough that we would hit from 114.77 with the performance, silver's performance of the Great Recession. And we would do that in 4 years, just like in the Great Recession. So by 2024, the trough would be at 45.908 if silver performed in the way that it performed in the Great Recession. If silver performed the same way that it performed in the 90s, then the trough would be at 52.89 in 6 years. I should change that. So by 2026, we would hit a trough of 52.89. If silver performs the way it did in the 70s, it would hit a trough of 40.99 in 7 years. So by 2027, we would be at 40.99. Now, the gold to silver ratio troughed based on the average fold performance of all 3 of these periods of time, and the timeline average, that would be 46.09. So the average of all of these would be roughly at 46.09, and the timeline on average would be 5.6 years. So by mid-2025, we would hit a trough from the peak of 114.77, we would hit a trough of 46.09. Now, here is the creme de la creme, the major enchilada, because the gold to silver ratio is nice to look at, but what does that mean as far as the price? So this is the chart that was in that same article that I just referred to from Jeff Clark. So if we were to take a look at the average performance based on these 3 periods of time here, the gold to silver ratio would be roughly at 46.09. So at 46.09, that's between these two right here. So actually, let me break this down, what you're seeing. This is the silver price based on the gold to silver ratio. The ratio is in green here. So you could have a ratio of 100 to 1, 90 to 1, 80 to 1, and so on. In the silver, you have the silver prices. And in yellow, you have the gold prices. So if gold is at $1,000 an ounce and the gold to silver ratio is at 100 to 1, that means silver will be at $10. Okay, you got it? Okay, so let's just say that silver will be at 50. It will take 50 ounces of silver to buy 1 ounce of gold. And let's say if we have an average performance. So, they say by in 18 months, so roughly that would be around 2022, we'll be at $3,000 gold. I believe Bank of America said that. So in that period of time, of course, we won't hit that trough because the trough on average would be 5.66. But let's say we're at 3,000. So the peak is at 114, and then the trough is roughly around 46. So let's just pick a number right in the middle. Let's just go with 70. So if at 3,000 in about 2022, according to Bank of America, if gold is at 3,000, we should be at roughly at $42.86. And by the end of that period, if gold doesn't change, if it's just constantly at 3,000, by the end of that period, we should be at $75 an ounce. Now, I hope this makes sense. I'm going to try to, nail it down a little bit more for you. But let's choose the performance of the 90s. If we have a similar silver performance that we had in the 90s based off the gold to silver ratio, in 6 years, our trough should be at 52.89. So let's round that down to 50. So by 2026, our ratio should be at 50 to 1. So let's just say gold at that time will be roughly around 4,000. Now remember, I said this isn't an exact science, so I'm just guesstimating here. Let's just say we have an average gold performance. We aren't going to get that hyperinflation that we're all hoping for. Well, I shouldn't say hope for, but we're hoping for a larger gold price. But let's say we have an average performance. Let's say gold hits around $4,000 an ounce. Around 50, we will have $80 an ounce for silver. So honestly, I feel like this is pretty realistic as far as gauging the silver price relative to the gold price and the gold to silver ratio. Also take a look at this. If we have extreme hyperinflation and gold is at $10,000 an ounce and the gold to silver ratio just drops to 10 to 1, now this is that hyperinflationary performance that we're talking about. That means that the silver price would be roughly at $1,000 an ounce. Now that's true scary hyperinflation right there. Okay, so we have all that there, but what about an extraordinary circumstance? Well, the closest thing that we actually have historically to an extraordinary circumstance is something that would mirror what happened in World War II. So funny enough, in World War II, we had a GSR peak of 97.31 in 1940, and we had a trough of 15.67. But here's the rub. That trough didn't hit until 1968. So it was roughly a 28-year decline before we hit that trough of 15.67, and we had a 6.2x performance in silver. So if we're expecting an extraordinary event that mirrors something like what happened after World War II, we should expect an extremely long period of decline, 28 years possibly, and also a 6.2 performance over that period for silver in order for it to hit these lows. Now, what would that look like? Well, from a peak of where we are right now at 114.77, that would mean if we have a similar performance of 6.2x, we would hit a trough of 18.51 of the gold to silver ratio in 28 years, meaning it would be 2048 before we hit that trough. Now, that is a very, 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 very long time from now. So let's take a look at what that would mean. Now, this is an extraordinary event, so I'm going to choose an extraordinary number here. So I'm going to choose $10,000 gold for this extraordinary event. And I'm going to say that if we have an 18 GSR, let's just round it up to 20, that would roughly mean that silver would hit roughly around $500 an ounce if we have this scenario happen, if gold is at $10,000 an ounce. So we have a couple of variables here. We don't know how silver will perform. We don't know what the economy is going to be like. We don't know when hyperinflation is going to hit. We don't know what the gold price is going to be. So this is extremely speculative. So take all of this with a grain of salt. But I think one of the important things about this exercise is to help us to start thinking about ranges. What is a realistic range to expect silver to be at, the silver price to be at, given certain situations? If we have an average situation, we might expect silver to peak roughly around this area, maybe 50s, 60s, 70s, maybe 80s. If we have an extraordinary event and gold performs extraordinarily well, then we may have something roughly around $500 silver an ounce. But who knows? That may not happen until maybe 28 years from now. So I think it's very important when we do these exercises to just keep in mind that this is purely speculative, but it helps give us ranges of what to possibly expect so we can prepare for all of those possibilities. Now, I'm going to ask you, have you done any calculations similar to this before? If so, where do you see the gold to silver ratio heading in the future, and how long will it take to head there? Let me know in the comments section below. Once again, thank you for watching this video. I had a fun time coming up with these calculations and performing this exercise myself. Please give the video a like. Please subscribe if you're new. Thanks again for watching. It's Black Bullion.